What morning in markets. Unbelievable what Mark Cudmore described as this black swan event. What do you make of the tariffs Trump has slapped on Mexico?
I think this is a significant escalation, there's no doubt. But more broadly, I think it shows that tariffs are being weaponized. And that has, I think, some very broader and serious structural implications as well. Mainly, I think the read-through to US-China, which we are taking from that, is that there is probably going to be no short-term resolution, which is a much bigger issue from a global perspective. And at the same time, it is becoming a bit, random in terms of how these tariffs can be used to counter issues which are not related to trade, like immigration, for example. So it's a significant escalation, and I think it is going to have a very powerful impact on risk premia, especially equity markets.
So what do you think? I mean, the MLive question of the day today is concerning the S&P 500. Clearly, we've seen in May a massive amount of equity value loss, $4 trillion across the globe. But in terms of the S&P, because Mexico is such an important trading partner to all of those manufacturers traded in New York, how much further can it fall if these tariffs go into effect?
I think if you look at, for example, within the sectors, auto sectors are the main ones. 93 billion worth of goods are imported from Mexico. Then you have TVs, electronics. You're talking about 27 billion, 17 billion of those categories. I think I'm expecting a -2% day today in S&P, especially if no counter news comes from the U.S. administration. And I think more fundamentally now you have a very strong confidence shock and it has been in the pipeline for a while now, because global capex was growing at 8% last year. It is growing at 2% now. And with this re-escalation, I think in the next few months we may have a situation where you have negative capex growth, which is very rare in non-recession years.
So what does an investor do? I mean, we see what they're doing now. They're buying treasuries. They're buying even the yen right now. We see a 108 handle on the yen. They're buying gold, interestingly enough. They hadn't been fleeing to gold for safety for a while. What would you recommend?
So we have been overweight bonds, especially overweight U.S. duration risk or U.S. treasuries since the end of April. We increased that overweight after the Trump's infamous tweet, and I think we remain cautious. In fact, we are looking for at least a 15% correction in emerging market equities, which is I think around 9% right now, and more than 10% correction in S&P in the next coming few days, and then we may see some visible risk premium being priced in before we can go back and re-engage with risky assets.
So in the coming few days, though, you wouldn't be surprised to see the S&P fall 10%, say, in the next week.
I think from a peak to trough perspective, we're down around 6.3, 6.4%. Yes, I would not be surprised. In fact, that is now with the Mexico escalation, that looks, I think, like a benign target as well.
Right. So you're saying, including what we've seen already in May, basically another 3.5%, 4%.
This was our base level. Wouldn't surprise me at all. In fact, it may go further.